Goldman Sachs analyzed nearly 500 mutual funds and found funds reduced their average overweight allocation to financials and technology to the lowest level in 5 years in the second quarter. What do you make of that? Is that a smart thing to do, Jim?
Honestly, I find it a little peculiar in this regard. I mean, you're taking the sector that has led.
Top performing.
And the lousiest, and the lousiest sector, and underweighting them both. I'll give it to you in just a second, Joe. What I would do is I would have expected, okay, if you're going to lighten up on tech, you're going to try to find the undervalued sector, which is financials. I do take comfort. I do believe in the financials here. It's just a question of when the 10-year starts to rise again and the yield curve steepens.
So let's just point out, though, if you strip out the FANG component of tech, the other component of technology, mutual funds actually increase the weighting. So a lot of this might be a Facebook story. It's a story about reducing allocations to Facebook. And believe it or not, they reduced allocations to Apple, which to me is startling, given that you're probably going to get a quicker iPhone launch in the fall. And when you look at the inventory management, it's as good as it's been in years. But strip out the FANG, they increase technology. And the other side of that is, yes, they pared back holdings in financials, but what did they do in healthcare? They came into healthcare and they took healthcare from an underweight to an overweight. Now, remember, that's a significant component of the S&P, so that's very much a catalyst.
Right. I mean, this whole conversation is all about whether now is the time in this longest bull market on record to start thinking about rotation. So what do you do here, Brenda?
I think there are lots of great opportunities beneath the surface. So we certainly have the FANG stocks that have been driving a lot of the total return of the market. But beneath the surface, there are some individual opportunities. For example, we think AT&T is a great opportunity here. This is a bellwether company. It's down double digits for the year. It's now trading at 9 times earnings. It has a dividend yield of over 6%, which, yes, yields are likely to rise, but 6% is still pretty darn good. There's a lot of concern over the integration of the Time Warner assets, but we think that Time Warner is poised to have a pretty good quarter this quarter. They only had 16 days of Time Warner in last quarter's results. But so far, the company's had a hit movie right out of the gates with Crazy Rich Asians, which nobody expected would be a hit. It's already earned more in box office receipts in the first weekend.
How long have you been in this trade?
We've owned AT&T for a number of years. We recently added to our position last week because we felt like the concerns were overdone. And this was a great opportunity to own a bellwether stock on sale.
I like Brenda's got a value tilt here. I'm not sure if you're uncomfortable with my labeling you that, but I like that we're talking about something that really hasn't gotten a lot of love.
Is it a value in your view?
It's definitely a value stock. But here's the thing, and I'll throw this back to you. It may well be a value trap. I mean, I hear what you're saying about Time Warner. I owned Time Warner until the merger went through. But that being said, I mean, the stock really has done nothing but the dividend yield. There's always these pricing pressures on the wireless component of this, pricing pressures within the cable component of it. Might be a value trap.
We think, in this environment, when you're looking for return, a 6% return is not a bad return.
Just the dividend.
Just the dividend. It does nothing. You're still
but if the underlying
6%.
stock is down 16% year to date, your 6% dividend yield goes away pretty fast.
Right. Well, we're saying from these levels, I think the stock is pretty washed out, and it can absolutely appreciate from here. So you're likely to get some return along with that 6% dividend.